let's jump right in. Today, we're diving into something completely new to me, at least I think so. Yeah. We're talking about the Kenyan financial system, specifically these things called Saccos.
Right.
You sent me a whole bunch of annual reports from their regulator, SASRA, going way back to 2011 and then 2018, 2020, 2021, 2023. And let me tell you, some of these numbers, billions of shillings. We're not talking small potatoes here.
No.
So before we get lost in the weeds,
sure,
give me the elevator pitch.
Okay.
What are these Saccos and what makes them so unique?
You know, I think what's really interesting about Kenyan Saccos is that they were born out of a need.
Yeah.
Right? So imagine, you know, before you had traditional banks in a lot of rural villages, or even if you did have them, they weren't necessarily meeting the needs of everyday Kenyans.
Right.
And so Saccos really stepped in to fill that void. They're more like community-powered banks.
Okay.
They're built on trust. They're built on people having a shared goal. And essentially what happens is people are pooling their money, their savings, not with some big institution they don't understand,
right,
but instead with their neighbors, with their colleagues, with, you know, even fellow farmers, things like that.
So it's like a financial safety net, but it's woven by the community itself.
Yeah.
Not by like some government program, some big bank. That's a really cool concept.
Yeah.
Okay, but I've got this stack of reports and this is massive. So we're not just talking about, you know, a couple hundred people putting in a few shillings here and there. Give me a sense of scale here. How much money are we talking about? How many people are caught up in this whole Sacco system?
So in 2023, regulated Saccos held a combined 682.19 billion shillings in deposits.
Okay, so for our listeners who, you know, maybe shillings aren't their everyday currency, that's, what is that, like over US $4 billion?
Something like that, yeah.
It's a huge amount of money. And sorry, you said how many Saccos?
357 regulated Saccos.
357 regulated Saccos with a combined membership of 6.84 million Kenyans.
Yeah, it's huge.
6.84 million.
Huge.
That's like the population of some countries.
Yeah.
It's incredible. And I'm picturing, I don't know, like a village meeting hall, not some big bank.
Offers. Well, some of them have grown into real financial powerhouses.
Have they?
Yeah.
Okay.
Take, for example, Walimu National Sacco.
Okay.
In 2020, they held a whopping 41.42 billion shillings in deposits.
41. I'm guessing Walimu is not a basket weaving cooperative or something.
No, not quite. Walimu actually means teacher in Swahili.
Oh, okay.
So this is a Sacco specifically for teachers.
Okay, so teachers pooling their resources. That makes sense.
Right.
But you've used the term regulated Saccos a couple of times now. And in these reports, they talk about different types of Saccos. So what's the deal with that?
Yeah. So you've hit on a key distinction here, which is deposit-taking Saccos, what we call DT Saccos.
Okay.
And then you've got non-deposit-taking Saccos, the NWDT Saccos. And so, you know, you can kind of think of it this way. The DT Saccos, these are the big leagues, right?
Right.
They're holding significant amounts of money. That's where that 682.19 billion figure comes in.
Right.
And crucially, these are the Saccos that are regulated by SASO.
Okay.
Just like traditional banks would be.
So tighter regulations for the bigger players, which makes sense.
Exactly.
But what about these NWDT Saccos? Why are they different? What makes them unique?
Well, these tend to be smaller.
Okay.
They're often much more deeply rooted in specific communities or professions. Think about like, you know, a group of farmers who are pooling resources together to buy equipment.
Yeah.
Or maybe a neighborhood Sacco that's providing small loans to its members.
Yeah.
Because they haven't traditionally been handling these same huge sums of deposits, they initially were outside of SASRA's direct purview.
So it's about balancing that need for financial stability with also supporting those smaller, more community-focused initiatives.
Exactly.
Yeah.
But that doesn't mean that NWDT Saccos are just like the Wild West.
Right.
They still have rules and guidelines that they need to follow.
Of course, yeah.
It's more about right-sizing the regulatory approach for their specific scale and the way that they operate.
Got it. Different rules maybe for the different players.
Yeah.
But everyone is still working within a framework.
Exactly.
Now, you can't talk about Saccos without bumping into this idea of common bonds. It comes up again and again in these reports.
Right.
So break it down for us. What exactly is a common bond? Why is it so fundamental to this whole SASTO model?
Common bonds are really the glue that holds Saccos together.
Okay.
It's that shared identity, that common ground that all the members have.
Right.
It could be their profession. Right.
Like the teachers.
Like the teachers at Woolloomooloo National. It could be their geographical location, Maybe they all live in a certain village or district.
Yeah.
Or even just belonging to the same farmers cooperative.
Right.
And this shared identity, it's really crucial.
Okay.
Because it creates this built-in layer of trust and accountability.
So it's like having built-in social collateral.
Oh, exactly, yeah.
Like, if I don't repay my loan, I'm not just ticking off some faceless bank. I'm letting down my entire community.
Exactly. Yeah. That's the idea.
That's powerful. But I did notice, especially in the more recent reports, I think it was the 2023 one, that they hinted that these common bonds are kind of in flux. They're evolving. What's going on there?
Yeah. That's a really interesting trend to watch. So we are seeing that common bonds are becoming a little bit more flexible.
Okay.
Particularly among some of the government-based Saccos. Mm-hmm. And essentially what they're doing is opening up membership to individuals who maybe wouldn't have traditionally fit that very narrow definition.
So potentially watering down that tight-knit community feel, is that a risk?
Yeah, I mean, it's definitely a double-edged sword, right? Mm-hmm. I mean, on the one hand, if you can expand your membership, bring in more people, that means more capital.
Right.
Which means these Saccos can grow, they can serve more people. Right. But on the other hand, you do have to wonder. If you start to lose that, really deep sense of shared responsibility, that, the social collateral we were talking about, does that weaken the system as a whole?
Right.
It's a question that's going to be really interesting to see play out.
So we've talked about common bonds. We've talked about billions of shillings sloshing around in this system.
But let's get down to brass tacks.
Right.
How are Saccos actually performing?
Right.
Are they living up to this promise of community-driven financial success?
That is the billion shilling question, isn't it?
Right.
And the answer, as with most things, is a little bit complicated. Mm-hmm. So, if we look at the kind of overall picture, there's no doubt we see growth. We see growth in assets. We see growth in loans. We see growth in membership over the years.
Oh, for example, in 2023, gross loans grew by 11.5%, mm-hmm. reaching 758.57 billion shillings.
Wow.
So that's a pretty healthy demand for credit.
Yeah.
It suggests that Saccos are actually doing what they're supposed to be doing, right? They're lending money, they're enabling businesses, they're supporting their communities.
So far, so good.
Yeah.
But I did notice that these reports also talk about something called non-performing loans, NPLs.
Right.
And that's not something you want to see a lot of, right? That's not a badge of honor in the financial world.
No, not really.
So remind me, what exactly is an NPL?
Yeah, so an NPL, you can think of it as a loan that's gone a little bit rogue.
Okay.
Right? It's where the borrower has either fallen behind on repayments or maybe even completely stopped paying altogether.
Right.
And when you have a high NPL ratio, that's a signal. It means that the Sacco might be taking on more risk than it can handle.
Yeah, it puts a strain on their finances, right?
Exactly.
It limits their ability to make new loans to other people.
Exactly. Which then, has this ripple effect throughout the whole system.
Right. It can impact the long-term sustainability of the whole Sacco.
Absolutely.
Okay, so a rising NPL ratio, that's definitely something to keep an eye on.
Yeah.
And looking through these reports, there are some fluctuations over the years. Mm-hmm. For instance, in 2021, there's this jump to 9.77%.
Yeah.
That must have set off alarm bells.
Yeah, it certainly got people's attention.
Right.
But, it's important to remember that 2021 was a bit of a weird year, right? Globally.
Yeah. COVID.
Yeah, the pandemic.
Yeah.
It really upended a lot of things.
The whole financial landscape was kind of turned upside down.
Exactly, yeah. So it's understandable that some of that increase in NPLs could have been due to factors that were completely outside the control of Saccos and their members.
Right. People lost jobs, businesses shut down.
Absolutely. Just massive uncertainty across the board.
Right.
But here's where the 2021 report gets really interesting, I think. They actually dig a little deeper.
Okay.
And they highlight a more specific issue that seems to have contributed to these rising NPLs.
Okay.
And that's this issue of non-remittance of deductions.
Deductions. Explain that to me.
Okay, so many Sacco members, particularly those who are employed by, say, government agencies or institutions, they have these agreements where their loan repayments are deducted automatically from their salaries.
Got it.
Right, so it streamlines the whole process, make sure the payments are made on time. At least that's the theory.
Sounds like a good system in theory. So what happened?
Yeah, what happened?
Yeah.
Well, in 2021, there was a significant amount of these funds that just weren't remitted. We're talking 3.4 billion shillings.
3.4 billion shillings just disappeared. That's a massive amount of money.
It's a huge amount.
The report must name names. Who dropped the ball here?
Well, according to the report, some of the biggest culprits were actually public universities and tertiary colleges.
Universities?
Yeah, they owed a combined 1.3 billion shillings to just 10 Saccos.
Wow. Okay, so even the universities are part of this ecosystem.
Exactly. It shows how deeply embedded these institutions are in Kenyan society.
Right, right. Okay, but let's not dwell on the negative too much. NPLs aside, right, these reports also highlight some really interesting trends and innovations that are happening within the Sacco world.
Oh, absolutely. Yeah. It's not all doom and gloom.
Okay.
In fact, you see this really remarkable ability of Kenyan Saccos to adapt, to innovate in response to a very, rapidly changing financial landscape.
Give me some examples. What kind of innovations are we talking about here?
Well, one of the biggest trends is this move toward digital credit products.
Okay.
Right. Saccos, they're embracing technology.
Right.
They're offering things like instant loans, mobile banking.
Right.
All those things that, younger, more tech-savvy customers really want.
So it's like the traditional Sacco model is getting a digital makeover.
Exactly. It's bridging that gap between those very community-focused roots and the convenience that people have come to expect from, more modern banking.
Right. Makes sense.
And it goes beyond just the apps, though.
Okay.
The reports also highlight this increasing connectivity between Saccos and ATM networks.
Okay. So no more queuing up for hours at the Sacco office.
Exactly.
Just to get some cash.
Right. You just walk up to an ATM, get your money.
Yeah.
It's all much more convenient.
Now, the 2020 report specifically mentioned Cooperative Bank of Kenya as being a big player in this space in terms of providing those ATM services.
Yeah.
Which, given the name, makes a lot of sense.
Right.
But are they the only game in town?
That's a good question. Cooperative Bank is big.
Yeah.
But it's not the only one.
Okay.
You'll also see in the reports that banks like ABC Bank, Family Bank are also involved in providing those ATM services to Saccos.
So there is a bit of healthy competition there.
Yeah.
Which is always good for the end user, or in this case, the Sacco member.
Exactly.
Now, besides digital loans, besides ATM access, what other sorts of innovations are shaking things up in the Kenyan Sacco world?
Well, another really significant development, and it's one that comes up in several of these reports, is this increasing integration of Saccos with credit reference bureaus.
CRBs.
CRBs, exactly.
Now, for those of us who aren't financial experts, remind me, what are CRBs?
Yeah, so CRBs, these are the institutions that essentially track people's credit histories.
Okay.
So they keep records of who's borrowed money, whether they've repaid it on time, things like that.
Okay, so they're like the keepers of the financial report cards.
Exactly, yeah. They help lenders, like Saccos, to assess the creditworthiness of potential borrowers.
Right. Make sure that people are who they say they are and that they've got a good track record. Okay, so how does this work with Saccos, though? Because in the past, it seems like they relied a lot on that social collateral that we talked about earlier, right? Knowing your borrowers personally, trusting those community ties.
Right, exactly.
But now they're plugging into this more formal credit scoring system.
Right, and it's a big shift.
So even within a close-knit community, it's getting harder to hide a bad credit history.
Pretty much, yeah. And it's interesting, if you look at, for example, the 2020 report, they highlight some really important new regulations regarding CRBs. Okay. So now Saccos are actually required to notify members before they submit any negative information to a CRB.
Oh, okay.
Right, so it gives people a chance to, address any errors, any disputes before that information becomes part of their permanent financial record.
Right, so it's about balancing this need to modernize lending practices with also safeguarding the rights of the Sacco members themselves.
Exactly, yeah. Finding that right balance.
It sounds like a lot to juggle.
It is. It's a complex system, for sure.
So with all of these changes happening, right, you've got digital transformation, you've got new regulations about things like CRBs, you've got this increasing sort of integration with the formal financial system. Mm-hmm. Who is keeping an eye on all of this? Who are the regulators making sure that this whole Sacco sector doesn't go off the rails?
Right.
So who's keeping everyone in line?
Right. Well, that's where Sacco comes in.
Okay.
The Sacco Society's regulatory authority. They're the watchdogs of the SECU's world.
Okay.
Setting the rules, making sure everybody's playing fair,
right,
and that these Saccos are actually operating safely and soundly.
Makes sense. And it seems like, looking at these reports, that SASRA's role it's been evolving over time, too.
Yeah, it's a really interesting evolution.
Yeah.
And it's partly been driven by the changing nature of the Sacco sector itself.
Right. It's like a two-way street.
Exactly.
They have to adapt to how the sector is changing.
Mm-hmm. And, it made me think back to when we were talking about those NWDT Saccos.
Right.
The ones that weren't initially under SASRA's direct supervision.
Yeah, the smaller, often more localized ones.
Exactly.
Yeah.
Well, that actually changed relatively recently in 2020.
Oh, okay. So pretty recent.
Yeah, SASRA's mandate expanded.
Okay.
So now they're covering those NWDT Saccos too, bringing them under that regulatory umbrella.
Interesting. So bigger net for SASRA now.
Bigger net.
What was the thinking behind that change?
Well, a lot of it comes down to risk management, right? And financial inclusion too.
Okay.
As the whole Sacco sector has grown, the potential impact, even of these smaller players.
Yeah, it's all connected.
It's all connected. So bringing them under that regulatory umbrella,
right,
it just makes sure that you've got this level playing field.
Makes sense. Everyone's playing by the same rules, at least to some extent.
Yeah, or at least a similar set of rules.
Okay. Now, these reports also mention this thing called risk-based supervision.
Right.
And honestly, I don't really know what that means. It sounds a little ominous.
Laughs. It's not as scary as it sounds. It's actually a pretty smart approach to regulation.
Okay, good.
So instead of having this one-size-fits-all approach, SASRA, they actually assess the risks associated with each Sacco individually.
Oh, interesting.
They look at its size, they look at how complex it is, the activities it's involved in.
So a tailored approach.
Tailored approach, exactly.
Okay.
So like a large, really sophisticated Sacco, like Moamu National that we talked about,
right,
they're probably going to receive much more frequent and in-depth scrutiny.
Okay.
Whereas a much smaller Sacco might receive more guidance, more support.
Right. So it's not about crushing the little guy with red tape.
Exactly.
It's about making sure that they're growing responsibly.
Sustainably.
Yeah, sustainably, yeah. Okay, now speaking of risks, one thing that I was really interested to see pop up in the reports is this focus on cybersecurity.
Oh, right, yeah.
Which, at first glance, you wouldn't necessarily think is a huge issue for. I don't know, maybe I'm just old-fashioned, but when I think of, a local Sacco,
right,
I'm not immediately thinking about hackers and data breaches and all of that.
Right. Well, this is where you see how much the Sacco world is changing.
Yeah.
Right? Because think about it. They're embracing all of these digital platforms now.
Right. The apps, the mobile banking.
They're handling so much more member data.
Yeah.
They're facilitating all of these online transactions.
Right.
And so suddenly they're just as vulnerable to cyber attacks as any other financial institution.
That's a really good point. You don't really think about it until you say it out loud, but yeah, it's true. They're handling people's money.
Exactly.
Yeah.
And so the 2023 report actually highlights some of the things that SASRA is doing in this area.
Okay, good. So they are aware of this.
They're aware of it.
Okay, good.
They're being proactive. So they're doing a lot of cybersecurity training, raising awareness among Sascos, helping them to really strengthen those defenses and protect that member data.
Good. It's one thing to, embrace the digital revolution, but
be safe.
You got to make sure that you're doing it securely. Okay, so we've covered a lot of ground today.
Yeah.
We talked about the history of Saccos, how big this sector is, some of the financial ups and downs, those fascinating common bonds, the regulatory landscape. It's clear that Sascos in Kenya, they're not just some niche financial product.
Right.
This is something that's really woven into the fabric of the entire country.
Absolutely.
But what does this all mean for the average listener?
That's the question.
Yeah. Why should anyone listening to this care about a community-based banking system thousands of miles away?
Yeah. I think what really struck me when we were going through all of this is just how resilient the Sasco model is.
Okay.
They've faced economic shocks. They've dealt with regulatory changes.
Right.
The rise of, all these shiny new fintech companies.
Well, competition is heating up.
The competition is definitely there.
Yeah.
But Sasco's, they haven't just survived. They've thrived.
Yeah, they're holding their own.
Exactly. And I think it offers this really fascinating glimpse into a very different way of thinking about banking. One that's built on trust, on shared values, and a deep, deep understanding of what that community actually needs.
Right, that hyper-local knowledge.
Exactly.
So, it is a reminder that finance, at its heart, it's not just about numbers, it's about people.
Yeah, 100%.
It's about empowering individuals, creating opportunities, fostering this kind of bottom-up economic growth.
100%. And, the story of Kenyan Saccos, it's definitely not over.
No, they're still evolving.
They're still figuring it out as they go.
Yeah.
But their journey so far, I think it offers some really valuable lessons for anyone who's interested in, the power of community, the importance of innovation, and this really human need for financial security.
Yeah, absolutely. So, listeners, I would encourage you dig into these reports. There's a lot to unpack here. But as you do, think about this. What are the lessons that we can learn from what the Kenyans have done?
Right.
How can we apply those lessons, maybe in our own communities, to create a more resilient, inclusive, community-centric financial future for everyone?
That's what it's all about.
That's the big question. That's all the time we have for today, but that's certainly something to chew on.